Have you ever scrolled through Zillow and wondered, can I actually afford that? Today, we're going to break down whether you can afford a $400,000 home in today's crazy market. So, I will show you what a monthly payment to expect, how much income you will need, and what credit score helps or hurts you, and how real buyers with everyday jobs are making it happen today. My name is Rick Guerrero. I've been lending now for over 11 years. I have personally purchased 9 homes in my lifetime, and I currently own 7 of them today. So when I talk about housing, affordability, and strategy, I am speaking both professionally and from personal experiences. I help first-time homebuyers, VA families, and move-up homeowners go from renting to owning without the fluff. My goal is to help you build generational wealth. So let's jump in and let's get specific. We are looking at a $400,000 home to purchase. So with 5% down, that would be $20,000 and your loan would be $380,000. Now let's talk about monthly mortgage payment. At today's 30-year fixed rate, the rate is about 6.76%. So your principal and interest would be about $2,465 a month. Then you add in the property taxes. Let's call that $300 a month. Then we add in the homeowner's insurance. We'll call that about $100 a month. And then we add in PMI. That could be around $150 a month. That puts your total monthly payment at about $3,000 a month. And that's not including the HOA if there's any. Pause and imagine this. What would that payment feel like compared to what you're paying in rent now? If you're paying $2,200 to $2,800 in rent, you're probably already halfway there without building any equity. So what kind of income supports that? Well, lenders use a debt to income ratio called a DTI. This means all your debt, including your mortgage, should stay around 45% of your gross income. If your only major expense is that mortgage, you would need to make about $6,700 a month. That's about $80,000 a year. But if you got a $600 car payment or credit cards, you'll need closer to $100,000 per year to stay within that qualifying range. Here's something most people don't realize. Not all debt is weighed the same. $600 in car payments hurts you more than $600 in student loans. Why? Because lenders know car debt is short-term and fixed, whereas student loans often offer flexible payment plans, and we lenders account for that. That is why affordability is so personal. So let me give you a few real-life examples. Danielle was a teacher. She made $76,000 a year. She had no major debts and a credit score of 720. She bought a $385,000 townhome using down payment assistance. Her payment was just under $2,900 a month. And you know what she told me at the closing table? She says, Rick, I was paying $2,750 in rent. This felt like a no-brainer. Then there was Marcus. Marcus was an Army vet. He made $68,000 in income a year. He used a VA loan, no down payment, no PMI. His monthly payment was about $2,550. He said at closing, I didn't think I could buy anything decent until you showed me the number. Then there's James and Tara, 2 nurses combined for $120,000 in income. They had about $1,000 a month in car and credit debt, pre-approved for $415,000 and bought a home for $399,000. This wasn't their dream home, but it was a starter they can grow into. 3 years from now, they will have equity, experience, and multiple options. So these are not unicorns of clients. These are everyday buyers with a plan. Now let's talk about credit. To get that 6.67% rate, lenders want to see a score of around 740 or higher. If your credit score is 670, well, your rate could be closer to 7.6%. And that $3,000 payment jumps to $3,200 or more. But here's what you probably didn't know. Even a 30-point credit bump can change your interest rate significantly. And that can mean thousands saved every single year. So you don't need an 800 credit score. You just need to know where you stand and what moves the needle in the credit score. I offer a quick guide where I can review your credit and help you get to the place where you need to be. So DM me and I will help you start your journey in that process. Now, if you're a veteran, active duty, or qualifying spouse, the VA loan is hands down the best mortgage product out there. No down payment, no PMI, flexible credit, lower rates. That same $400,000 home that we're considering with the VA loan, your monthly payment might be $2,500 to $2,700. That's a $400 or more savings every single month, which trust me, that all adds up over $100,000 over the life of the loan. That is why I go so hard for my veterans. I even host free jiu-jitsu seminars just for the veteran community because I want to serve those that have served our country. So let's bust down some of those myths. You do not need 20% down. There are legit programs where 3%, 3.5%, even 0% down are available. You do not need perfect credit score. I've closed loans for borrowers with scores in the 600s and even the high 500s. You do not even need to wait for rates to drop. Let me ask you this. If rates were to go from 7% to 6.5%, but home prices go up to 5 to 10%, did you really win? Waiting for that perfect rate drop while prices are high, and it's like standing on the sidelines while the game is still being played. It's not about the market, it's about being prepared for the opportunity. And that's where I come in to help. If you're still watching, here's what you should do next. DM me, let's connect, comment below, share this, but let's connect. I can help build a custom affordability plan for you in less than 10 minutes. You'll know what price range you qualify for, which loan programs best fit your situation, and how to improve or fast track your pre-approval. No pressure, just real numbers and a clear path to homeownership. So whether you're buying in 30 days or 6 months from now, knowing your numbers gives you the absolute confidence. If this helped you, hit like, hit subscribe, drop a comment where your city you're from, and I'll personally reply with a rough home affordability range. Next video, I'll dive into more tips on how to buy a home. Like I said earlier in the video, my goal is to help more families accomplish the American dream of homeownership and build generational wealth. Through my years of experience, there is no better path to building wealth than through homeownership. So comment and subscribe. Have a great day.